Guys, big day in the market. Off the lows of the day, though, but the Nasdaq finished down 0.95%, got as low as 1.5%. The Dow finished down exactly 1%, and the S&P finished down 0.72%. Humana, the biggest loser on the market, at down 13.4%. Phillips, 66, was up about 3.4% for the largest gain of the day. Guys, Bitcoin is down 7.5% since Friday. But remember, it's still up a ton this year and over the last few months. So if you're a crypto lover, things are still in a positive direction, but there's a lot of volatility with these assets. You guys have all seen it in other videos I've made that I think markets are very frothy based on the 10-year cyclically adjusted PE ratio, which takes the last 10 years of earnings, brings it to today, and takes the market price divided by that. We're at double historical average. The stock market to GDP ratio, which Warren Buffett says is the single most reliable indicator at any time, any given moment for stock market valuations, is also about 98% above its historical average. Can this go longer? Absolutely. We have no idea. Remember, we don't know. We know what markets are supposed to do. We just don't know when they're going to do it. Markets will end up doing what they're supposed to do. You can't keep paying nosebleed prices for a future stream of cash flow. If I told you today that I'm going to pay you $1 a day the rest of your life, $1 a day for the rest of your life, but you said, hey, instead I want money today for that, you're going to calculate that a certain way. And then that's worth it to you. The lower your return requirement, the more you're going to pay today, right? Because if, for example, it's $365 a year. If you want a 1% return, $36,500 gives you that 1% return. If you want a 10% return, you can only pay $3,650. So I want you to hear that. The more you pay for something, the less your return is. The less you pay for something, the more your return is. Because the cash flow is going to be what it's going to be. But you're paying for that cash flow today. Look at Tesla. Tesla's down big time. I love talking about Tesla, not as aha, I told you so, because guess what? Tesla's worth more than when I first started calling it overvalued. So haha on me for being wrong, right? I said Tesla was overpriced at like $10 or $20 a share. Now I think it's worth well north of that, right? But look at Tesla. Tesla year to date is down 33%, was down 5% today to 166. I think it actually got in the 150s at one point today. 1 year price, minus 14%. But here's what's amazing. 5 years is up 774%. But guys, 2.5 years ago, it hit an all-time high of 414. So in the last 5 years, being down, in the last 2.5 years, being down 60, 70%, it's still up 774% over the last 5 years. That just goes to show you how much growth they've had. That's incredible. Now, obviously, the mood has shifted on Tesla. Why? Because up here to here, 2.5 years of nothing, people who bought Tesla for the wrong reasons, for the reasons of only seeing price go up, when price starts to fall, what do they think? Where am I getting my return? But when you learn, like you are here, that when you buy a stock, you're buying a piece of a business, all you care about is, are the fundamentals getting better? And can I pay a reasonable price for the company today? With some margin of safety in there. Because remember, you need margin of safety because we don't know the future. Valuation is an imprecise art. And humans make mistakes. But remember, buying an investment, you use the fundamentals to do that. It's the emotional part when you have all this volatility. For those of you who love crypto, you saw your crypto go from 69,000 down to 15,000, up to 72,000, down to 65 now. It's a lot of volatility. Are you still way high? Absolutely. And it can be exciting. For those of you who bought at 65, 70,000, a year, whatever it was, a year and a half, 2 years ago, whatever it was, I don't remember. Then you're probably like, crap, what happened here? Now you're back to even. Do you cash out? Do you cash it? That's the emotional part. The great news is if you understand that when you buy something, you're buying a future stream of cash flow, two things occur. One, if you own Bitcoin, you realize how fucked you are because you have no cash flow. You have nothing. All you have is the idiot next door going to pay more than I did for it? Spoiler alert, I don't like crypto. Point number two is that it's going to make you realize, okay, I've got to learn some fundamental process to understand that a cash flowing entity, even if I don't get the cash because it sits in a company's bank account, is still increasing the value of my investment. And then if the stock price goes down, like it did with Tesla, but you see the fundamentals get better, guys, look back at this. Go look at the fundamentals. Let's look it up right here. I'm just going to pull it up right here. 5 years ago to now. Annual, 5 years ago on Tesla, 24.5 billion to 96 billion. That's 4 times more. 4 times more. Okay, great. Let's go to when it was back when they hit their all-time high, 414. What was that? That was November of 2021. So let's go to their financial statements. Let's go to quarterly. November of 2021. They did $17.7 billion that quarter. This quarter, they did 25. So let's recap. They're almost 50% more revenue than they were back then. And their price went from 414. Right now it's at 166. If you truly believed that this was a good value, 414 was a good value and they did 17.7 billion, you should love it now. So guys, the revenue is up a ton since the stock was at 414, 50% almost. You can't possibly look at me and say, I believed it was worth 414 and I don't believe it's worth 166 today. For the record, I don't like it at 166. Professor Aswath, which is a friend of the channel, he likes it at 180. I don't see it. He does. I think it's a car company. He probably puts more value on the future potential. That's fine. But the point is, guys, I'm showing you the volatility in markets, the volatility in stocks. Your goal, I'm going to repeat till I'm blue in the face, is to learn the emotional side of seeing this Mr. Market every single day telling you worth more, worth less, worth more, worth less, worth more. And you just sit there and say, the fundamentals are getting better. I am okay with this. Is it hard? Really hard. We've all been there. Warren Buffett's made emotional mistakes. I've made emotional mistakes. You're going to make emotional mistakes. You already have. I'm going to continue to do that. I do it all the time. I did it with Meta. I did it with shorting NVIDIA. I did it with all those. Now, you can say like my shorting NVIDIA was fundamentals based, but I didn't have a set process besides it's overvalued. I didn't realize how emotional the market can get. That's on me. We're all going to do that. And that is exactly why I created the software in the community. I wanted a way, because I knew that I'm going to make my decisions based on fundamentals. And on this, I wanted to combine them both. So I sat there and created the software with all of these tools right here to help me make all my decisions I needed. And then I have the community there because investing can be a lonely road. And when you go out there and you're making investments and they start to go down, which they will go down as you own them, you have to be able to sit there and not lose your mind, not sit there and go, oh my God, this thing's going to zero. It happens. You're going to feel that way. I have felt that way. And that's why the community is so great to go in there and chat and say, hey, what are you guys thinking about this? Am I overreacting? Am I not overreacting? What do you think about this investment? It's a great place to go for that. It's a great place to go to be able to navigate the ups and downs of these markets. Thousands of investors are in there and they can help you do this. So if you're sick of making these emotional decisions that cost you money, join the community by clicking the link below. It's $7 for 7 days. It's so awesome. Test drive it, take it for a spin, say hi to me in the general chat just by tagging me and saying hi. So another comment. Fed chair from Cleveland, our hometown, Mester, she's come out and said, listen, I think we're going to have rate cuts this year. And I wonder how much of that's just because she's in the public circuit. She says, I think we're going to have rate cuts, but I still want to see inflation coming down. I think it's a theme of the Fed president saying this in a nice, eloquent way because they don't want people pissed off. Remember, they're human too, guys. They're just like you and I. They're not levitating above us. They have families. They have reputations they want to uphold. They don't want to be hated. So they're probably going to sit there and dance the fine line of saying, you know what? We want to cut rates, but we're going to keep watching inflation and make sure it keeps going down. Fed Chairman Powell said a long time ago, I'd rather over increase rates than under increase them. He is so worried about inflation that he says, listen, I'd rather halt the economy. And they even said to him on the Hill, you're going to lose 2 million jobs. You're going to cost this country 2 million jobs. He says, yeah, but it's worse than 100 million. It's worse to have 100 million families who can't afford bread and milk. I'm paraphrasing what he said. But inflation affects everyone, except for a very, 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 very small group of people. Inflation affects everybody. She thinks that maybe June, there'll be some rate cuts. Maybe so. I know it's hard for them because they're probably sitting at home going, everybody wants us to tell them when they're going to cut rates. But we got to be cautious here. And guys, go look at the history of when rates are cut. They're not cut because things are going swimmingly well. Rates are cut because things aren't going well. There's recessions. And so far, we've avoided this recession since the yield curve has been inverted. And it's been inverted since June 6th of 2022. We're coming up to the 2-year mark here soon. That's 3 months. No, July 6th. I'm sorry. We're coming 3 months away from the 2-year mark. since rates inverted. That's a pretty long streak. Now, guys, we talk a lot about the Fed, and a lot of people think that the Fed decisions is going to affect their investing decisions. It will not, and it should not. If it affects your decisions, you don't have a long enough time horizon. Look at the history of stocks. This is the history of stocks. You ready? They go like this. Let me bring up the exact, let's just do this. They go like this. And this is what happens along the way. Let's go back. Let's say this is 1982, and this is 2024, okay? Somebody tried to kill Reagan. Then we had Gulf War. And then we had 95 recession. Then we had impeachment. We had long-term multi-capital. Then we had 9/11. Then we had contested elections. Then we had great financial crisis. Then we had a bunch of other stuff. Then we had COVID. We have all these things that have happened, and where have stocks gone? They've gone straight up. But this is up. Guess what? In that time period, we've had so many different things happen in this world, including Fed policies, issues, great things, bad things. At the end of the day, I'm trying to teach you that all that stuff doesn't matter. What matters is picking good companies and buying them at good prices, and then figuring out how you can control the emotions so that you can hold those companies through thick and thin. Because there's always a reason not to buy a company. But if you learn how to analyze a company, understand the fundamentals, you're going to look at that as an opportunity when stocks fall. So guys, no matter what investment you have, no matter what process you have, I'm just encouraging you to learn a process that helps you make the right decision up front, and then learn to handle your emotions so you can ride those out, because that's where you make the big money, is riding them out the long term. So click the link below to join the community, and thank you very much for your time.